All right, we're going to break into a quick rundown of our forecast for tomorrow, which will be Tuesday, May 16th. I am filming this here on Monday at 9:46 p.m. Mountain Standard Time. Let's break into it. We're going to start here on the daily. As you can see, we are in a very consolidated range over the past few weeks. I mean, you can go all the way back to Monday, May 8th, and from there we have essentially been range bound. Now, this is in this is very interesting because eventually we are gonna have to break out of this range. Now, if you even look further back though, we're in a bigger range. So let's just kind of point out the ranges that we're kind of sitting in. We've got this range that's lasted for about a week right here. And then we've got a bigger range that's lasted for basically over a month. That is basically from down there to up here. And we've kind of just been sitting in this range, and there's been smaller ranges that have been made inside of that range, like from here to here. There was a range. So as you can see, there's really been no movement in S&P in one direction over the past month. It's very undecided, and for that reason, SPX has been very difficult to trade for a lot of people. Doesn't mean it can't be traded because there's plenty of intraday and even swing trades that have potential even with how choppy the market is. As we can see with the daily candle here, we finished with a bullish candle. But again, as you can see, it broke no areas of liquidity. It swept no liquidity on the higher time frame. It was a very weak candle and nothing really happened. So, looking at the daily, we don't have much to go off of in terms of what it could possibly do because of how slow moving this has been. Because we still have these highs from February that have yet to be tapped into, but we do have this high that was made on May 1st swept all the other highs that were sitting over here and these ones up here. So all that liquidity was swept on May 1st there. So that's kind of our buy side liquidity that we see. On top of that, you could consider this a breaker block here. And as you can see, every time it's really tapped into this area, we've immediately rejected it and we are nearing it once again. We could easily come right back into here. That's exactly what happened yesterday, and we'll go down to the lower time frames to show where and when that happened for Monday, and then start to predict what could happen going into tomorrow on Tuesday. Um, Other than that, there's really not much going on. We do have a fair value gap that also is being respected here. This is our fair value gap that's been respected multiple times now, but it's getting closer to being broken. As you can see, the closure of all of these candles has been, if we pull out our fib tool here, you can see that the closure, the consequential encroachment, which is the 50% line of your fair value gap, which is right around here. As you can see, no candles have even closed below that. So, with this being said, I mean, there is really not a lot to go off of. Like, both sides, buy side and sell side, are they both have sides of confluence. They both have sides that are being respected. And so until we see something really start to play out and break out and make a move, and we get good candle closures on a daily time frame, right now we're pretty much undecided. So that's in my opinion, that's what's kind of happening um, on the daily time frame here for SPX. Now, you could say that we are in a premium based off of this would pretty much be a weekly PD array, but as you can see, we're way up there in premium, and we've been up there for quite some time now. If we want to add, oh, just kidding, I'm not going to worry about that right now. But yeah, as you can see, we've been kind of just chilling around premium for quite some time, a few months, pretty much since March, the end of March, we've been in this premium. And we have not really made that much of a push to get back to even fair value or equilibrium. So there is definitely a potential that we eventually come back down to 3801 and even 3762 and kind of sweep that sell side liquidity. But we've got a lot of stuff to get through here, and decisions need to be made before that happens. Okay. Okay. We're here on the 4 hour. We're going to see what's up. We're going to see what's popping. We're going to kind of watch and look for our areas of importance. So, we have this 4 hour fair value gap that does appear, yes, it has still been respected. It has not been broken. And so that is still a significant 4 hour fair value gap. It's still an area where we need to watch and see what's going to happen there. So that's an important zone. We see that. Now, what we also see from the past few days and from last week is a lot of liquidity sweeping. And also, once again, just like on the daily, the 4 hour has its own fair value gap that has been respected. Still no closures. Now, last week I considered bearish movement to be more likely, though, because if we take into consideration consequential encroachment, typically you don't like to see candles close below, but they did. But this is basically invalidated because if I use that on this 4 hour fair value gap, the same situation has made itself manifest. And essentially, again, we're at a gridlock. There's really nothing we can do but wait. There's not much to trade here on the higher time frames. Now, you could easily find your places to get in these trades, but just from an analysis point, you shouldn't be expecting big moves. Because the trade that occurred today, which is right here, this is New York Open. Look at that wick. That was your trade. Your trade was either you rode that wick all the way down or you identified that we had some sell side liquidity here, right? And you could also identify that this is an order block, right? And so on the 4 hour, the order block was respected, liquidity was swept, and you could have rode this back up. That's all we've really seen so far. We are waiting for the market to show its hand. Monday, nothing was really shown but manipulation. And that is why Mondays are a day to avoid, and that's something that I've put in my notes over the past few weeks is Mondays are heavily manipulated. They don't go where you think they're going to go, and that's for a reason. They haven't shown their hand yet. It's early in the week. It's the first day, so you got to be patient. But going into tomorrow, honestly, on the higher time frames, I'm not seeing enough to be very confident in what's going to happen in a higher time frame situation. I am really waiting because if you even pull out and look at this, like we're pretty much just in high resistance on on these time frames. There's legitimately, it's just expanding on both sides, wiping out buy side, wiping out sell side, taking out buy stops, taking out sell stops. Everybody's getting liquidated. Everybody's losing trades. This is bad market conditions at the moment. We're waiting for indefinite move on the higher time frames. That does not mean that you can't trade on some of these lower time frames, because there's still opportunities. And that's where you have to adapt and be able to have a trading model that can be successful in a situation like this. So on the 1 hour, again, I mean, look at this. This is complete and utter range-bound market trading. And as you can see, this was the trade that I was speaking of on the 4 hour. Price came, swept this. This is your turtle soup, as they might call it. Reversed. On the 15-minute or the 5-minute, you could probably catch an entry somewhere around here. Ride that all the way up. 200 points. Probably even get a lower entry, 122. Still close to a 2-to-1. That's how you do it, you know. But that's easier said than done. Now, in my opinion, with what we're sitting here looking at, I'm pretty unsure about what we're going to do tomorrow, to be honest. I'm kind of waiting for market to tip its hand. Currently, this is kind of my PD array, and so I believe we're in a premium. I also do believe, though, that it's quite likely that we come not only to sweep this buy-side liquidity again during London market, but we may also come and sweep that buy-side liquidity back from May 12th, which was Friday, and we may even sweep even higher. I'm not going to mark this one out, but May 11th, or even the high from May 10th. Maybe I'll mark that. There you go. I think during London, we see some push to the upside. Somewhere in this area, maybe this high. Sweep of liquidity, create that turtle soup. And then we come back and test these lows once again. I think that is really just where market is going right now, and I could see a high being made tomorrow. But once again, we are so undecided with price action that I'm not going to neglect the fact that there could be just a sell-side liquidity sweep, because we could sweep any of these sell-side areas and it would be basically the same thing, you know? So, you know, I will not neglect the fact that we could easily come down here. Really what you want to see is in London, we sweep one of these levels on either side of the market. We sweep some of this liquidity, and then we see a reversal during pre-market and into New York equities open. Recently, what we've seen a lot of over the past few weeks, or at least the past few days, in my opinion, is, as you can see, if we look at the 15-minute of today's trades, or today's market movement, price came up during London, and then in pre-market, look what happens. We start dumping, market opens, we continue the dump until 10:15, and then we do a reversal. So we get a good 2 hours, though, of push down, or at least an hour. But if you include pre-market, it's about 2 hours. And if I go back here, have a look at Friday, it was the same situation. Price came up during London, started slowly dropping in the pre-market, market opens, and we tank. And then we do a little bit of reversal. So we've had the same kind of trades over the past few days, and I think it's just continued to happen. Again, this was Thursday, the same exact thing. Wednesday, same thing, just the other way, bullish movement. I mean, it has been pretty obvious kind of trading. There's just a lot of continuation. You're not going to get your Judas swing at the market open on equities as easy right now. It's just not happening. And I think some of the best trades that you can look for right now is to take a pre-market entry after London session has swept either the buy side or sell side of Asian session higher lows. And then from there, you get into your entry model and you start looking for different ideas, but you start marking out your break of structures, which was right here. And I mean, look, you don't need a perfect entry at 8:30 pre-market to catch this. You could get a really solid entry on this, to be honest. I mean, if we go back here, look at the entry. You got a break of structure. Now, you might consider this just too early. Either way, you don't even really need that precise of an entry because market has been moving very trendy before equities open and into equity open. Look at this. There was very little pushback on your trade here. We could have gotten in there, put our stops above London highs. Could have put your stop there for 247 pips profit right there. Points profit. Almost a 3-to-1. Probably could have had an even tighter stop somewhere around here. There's your 4.4-to-1. That's not, obviously that's, hindsight trading, but that's kind of what we're looking for in going into tomorrow. Like if we mark out, and again, I'll show another example of this. We go here and mark out London session, Asian session, which is right here. So right now the high of Asian session is up there, and we have just crossed the midnight mark. And so we are nearing London session here. We're pre-market in London right now. And that's essentially, we're looking for price to either sweep this buy side up here or sweep this sell side down here. Right now, it looks like we're going to sell side sweep and we're going to continue higher. Ideally, if we do get this sell side sweep, it comes and sweeps this sell side as well at 4123.7. And then from there, we reverse and we start to test 4160 area. That's the ideal best movement. Now, that's probably not going to happen, but something along those lines can happen. Another example of this, though, is right here. If we go mark out... Okay, this was farther back than I thought. Hold on. Oh, that's because that was Sunday. I'm not marking that one. We'll go do this one over here. Friday. Okay, Friday's trade, or Friday's Asian session going into Friday's trading starts over here at 18. There's your low. You could call that your high. You could also call, well, actually, that is your high. If you go to 3, 18 to 3, there's your Asian session. Lows there, highs there. As you can see, High gets taken out, buy side taken out there. And if you look, your real buy side liquidity right above that, which is what you'd be waiting for after the highs get taken out, you're probably going to want to wait for a higher time frame buy side liquidity to get taken out, which when you look at it, there it is. You get a buy side liquidity sweep over there. Okay, and then you switch to the 15-minute time frame. That's really where you probably want your break of structure. So we come back over here and look. And maybe you even were saying, oh, well, there's also this buy side liquidity, so we can mark it out as well. But if you look, it's the same thing here. The entry's not much different. You could have got a slightly better entry if you base it off of this buy side, but if you base your structure off of this buy side that gets swept, then you consider that to be your break of structure there. Right? Or you consider this to be your break of structure. You might sit in some drawdown, but really it's just a fair value gap retest up here. Anyways, this is dragging on a little bit. I'm just showing examples of entries that I'm going to be looking for going into tomorrow, because my typical strategy of a Judas swing is not presenting itself. So I'm either looking for a turtle soup or some type of continuation. You have to be adaptable in the markets unless you want to trade multiple markets, which right now I'm not trading multiple markets. And of course, I'm still looking for my Judas swing model. But if it doesn't appear, I have other models that I've been testing that I'm working on. And so forecasting those models, backtesting those models is important. And watching how those models form is very important. This is one of those models. Again, this is a solid 3.48 to 1 trade right here. There you have it. That's what that looks like. This is why I'm testing this model. Now this entry though happens when 9:45. Great entry. This is literally a fantastic entry to take. So again, going into tomorrow, that's exactly what I'm looking for. I'll be looking for the buy side or the sell side to get taken out from Asian here, highs and lows, and then a buy side or sell side higher time frame liquidity to get swept and to see if we get reactions off of that and a break of structure. From there, I'm looking for a pre-market entry somewhere between 8:30 and an entry between 8:30 and probably 10 o'clock. That's where I'm looking for my entry. After that, the market changes. It slows down for a bit, and then you get into the afternoon session, which I don't typically trade and don't want to trade. So there you have it. That is my S&P 500 breakdown forecast for tomorrow, Tuesday, May 16th, 2023. Yeah, signing off. If you got any questions, let me know. If you got anything to add, you think I'm stupid, whatever, leave it in the comments. I'd love to hear it. If there's a better way I can be analyzing, better way I can be explaining, I'd also love to hear it. The goal in this is all for everyone to get better, including myself. I am always looking to get better, always looking to learn. So if anybody has anything to add, questions, anything, let a brother know. Leave a like on this, subscribe, whatever. You know the deal. Show me some love. Deuces. It's your boy Deezy. I'll be back at it tomorrow. Yes, sir.